The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 17th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, well, that's something you and that's something we must master each and every day. So let's begin our day with some empowering beliefs. Goes like this. Most people have no idea of the giant capacity that we can immediately command when we focus all of our resources on mastering a single area of our lives. And one of those areas of our life that I believe we should master is trading, is money management. Another area is time. You see, once you have mastered time, you will understand how true it is that we overestimate what we can accomplish in a year and underestimate what we can achieve in a decade. One reason so few of us achieve what we truly want is that we never direct our focus. We never concentrate our power. Most people dabble their way through life. Not you, though. But most people, they do. They never decide to master anything in particular. Success comes from taking the initiative and following up. It comes from persisting. How about eloquently expressing the depth of your conviction? Question: what simple action could you take today to produce a new momentum toward your success in life? This much I know is true. The path to success, well, it's to take massive action, massive, determined action. There's no abiding success without commitment. If you want to be successful, find someone who's achieved the results you want and copy what they do, and you'll achieve the same results. It's a beautiful formula, folks. The time is now to master anything that you want in your life. Mastery. That is a beautiful thing. Let's go check out these markets out here. Right now, we've got the Dow up 50 points, trade out at 15,543. S&P up 5 at 1702. Composite up 13 points at 3731. Russell 2000 up $2. Trade out at 10.58. Apple up $4 and change at 4.54. Microsoft up 17 ticks. They're not really celebrating the mere fact that Microsoft is going to go ahead and buy back $40 billion of its stock, boost their dividend by about 22% or so. Google's off $4.76. Cisco up 15. Intel up 41 cents. Intel just running into a brick wall here shortly. To the upside, we've got Kyocera Biopharma. They are up a nice $9. They are clear sailing ahead for them. They are at all-time highs. Repros Therapeutics, they're up about $6. Apple up $4.50. Amazon up $3.50. Stratasys, a 3D company out there, they're up $3. Herbalife up $2.22. Safeway up $2 and change. 3D Systems, they're up a couple bucks as well. Regeneron Pharmaceuticals, they broke out, I believe, yesterday. They're up another $1.62 this morning. Wynn Resorts up $1.94. To the downside, you've got Outer Wall. I believe that is the red box, folks. They're down $7 and change. It's off 13%. Google just behind them, off 5.25. Rock, Tennessee, RKT, a little rocket ship that's crashing this morning, up about 3%, down $3 and change. Jinko Solar, JKS, they're off $2. Gold Resource Corp, GORO, we're going to take a look at that one. That's off 20% this morning, down $1.78. Netflix is off $2. Our call-in number is 877-927-6648. We have seen the high in the ES Mini here in the S&P for at least about a half an hour or so. It should, or if we haven't seen it here, we should be seeing it here momentarily, most likely during this half-hour segment out here. We're going to take a look at the ES Mini. We'll start off there, then we'll go start taking a look at the indexes, see what they're doing out here in the marketplace. The reason why I say that, well, I say it because I get to say that I'm the host, right? No, what we're taking a look at here, we're just taking a look at a couple of different tools, one of those being retracements of swing points. If we take a look at retracements of swing points, we can see that the price that we hit here, just as we were coming on the air, right in that 1690-650 level, that was a 0.786 retracement of a set of swing points and a 0.618 retracement as well. And we can take a look at the oversold, overbought indicators, that relative strength indicator, and we can see we're moving into the extreme levels. Those are the bottom little squiggly lines that you're seeing on my screen out here that says that the ES Mini needs to take a rest, move sideways just to work off some of that overbought condition inside the marketplace. So if we take a look at the gap up from yesterday, we hit a high coming into the trading session at 7 p.m. That was on Sunday evening. And so if we go from that high down to the low right out here that came in at about 4:30 this morning, that's the 0.618 retracement that has been formed inside the marketplace. So what you can expect here is, one of two things. Either a move sideways to work off this overbought condition, or you could, worse than that, you can see a pullback. And that pullback, if it gets back into the lower part of the range, which is going to be inside the ES Mini, lower part of the range is back below 1692 inside that gap area. That opens up your move down to the 1692 area, and that is in the ES Mini. In any event, let's go take a look at the daily indexes out here. Let's see what it is that we've got moving in the markets. What we do have moving in the market here is the S&P Volatility Index, which we're going to start off with taking a look at. That's the VIX Index. It's trading at 1440, so only up 2 points. But we're going to see a second day in a row here where the VIX is going to trade higher and the markets are going to trade higher. Okay, folks, all you need to do is take out a 2x4 and hit it upside your own head out there, because that just doesn't work like that. That doesn't make sense. You want to talk about signals that say, hey, be careful, Will Robinson, or be careful, whatever your name is out there, that would be one of them. So we'll pay attention to that coming into the end of the day. We pay attention to that 50-day exponential moving average. That is at 1471. It's trading at 1438 right now. Folks, if it gets above 1471, just back up the trucks and go short. It's as simple as that. If we take a look here at the S&P 500, let's go see what it is doing right now. That is trading at the top of its session today, 1703.45. Again, testing the August 5th swing point. August 2nd swing point really is what we should be paying. Both of them are about the same, but August 2nd is the actual swing point high, 1709.67. The low of that swing point is 1700.68. We did get a rejection of that swing point entirely yesterday. We'll see if today is a second rejection, but it was coming in there with some volume. We'll take a look at the ETFs, the SPY, later and in just a little bit, and we'll see that it was moving into that level with volume. Says that it wanted to be tested again today, and in fact that's what we are seeing out here. The high is 1709.67. We'll see if in fact the SPYs can get up there, but as we're looking at the ES Mini, we know that it is tired and it needs to work off a little bit of an overbought condition out there. So if it's going to happen, maybe it'll happen during Basil's show later on during the day, if in fact it does take place. That's on the S&P 500, and that's what you're going to be paying attention to. There is the swing point from August the 2nd. Again, what you want to write down on your pad of paper, 1700.68. You see a close below that today, you'll have your second reversal of good fortune out there inside the S&P 500. If we go take a look at the Dow yesterday getting back inside its rising price channel, that is a bullish sign out there. The Dow really giving you the largest of bullish signals. It's up above the 0.786 level. The Dow here, what it wants to do is test August 2nd. Never got up there yesterday. The low is 15,558.68. Still have not gotten up there today. The high so far, 15,550.22. So the number you want to have down on a pad of paper, because weak links, the weakness out here, all of the indexes, they've all gotten now back up into their swing point highs. The Dow really was the rubber band that had stretched to the downside, and man, that was a nice stretch back up to the upside, but it is now also moving into, on the daily chart, it is moving into the overbought territory. So expect that the Dow will test this area. Again, the number you want to be paying attention to is 15,558.68. If it closes inside 15,500, 558.68. It can go test the highs out there, and we have not seen the rejection of that swing point yet on the Dow. We saw it in the Dow futures, but not inside the actual Dow Jones index, so that's something that we want to be paying attention to. How about the Russell 2000? As we take a look at the Russell 2000, that yesterday, what it did was it went ahead and tested the swing point high. Now, instead of August 2nd, it is August the 5th. And as it tested the swing point high, it also gave us a reversal candle. It gave us the long-lost cousin of the hammer, long only because this happens up at the highs out here. And now that's a reversal candle we saw take place yesterday. That sets up resistance, being really the high of yesterday's session inside the Russell. That would be a 1065 and a quarter. But we did see a test of the high. We did see a reversal candle. You need to see it close lower today for that reversal candle to have any real significant meaning. And also a close below resistance. That resistance set up here by the evening star formation candle, which was a 3-candle configuration that was on August 12th, August the 14th, as well as August the 13th and August the 14th. So that says if, in fact, the Russell 2000 closes back below 1054.76, and yesterday was a close just above that, it had closed at 1056 and a quarter out there. So that's what we're paying attention to on the Russell. And if you don't know your candlesticks out there, one great way to master it would be to join me on September 27th. That is next Friday. I'll be conducting a one-day online master trader course, the ultimate money machine. All the details are on the homepage of TFNN.com, but it's pretty simple. It goes like this, folks. You sign up. You get 1 month of my newsletter. You can use Tiger Dollars. If you don't have Tiger Dollars, you can call Leanna in the office. She'll help you walk through that so you can get another 10% discount. Basically, you're looking at, just over the course of the next year, this being a couple of dollars. But look, it's not just money. I know that money is not really your issue with regard to whether or not you can take the class. If you have the commitment, you can find the resources, you can find the time, you can find the money. Remember, this course is also archived on your members page, so even if you can't be there live, you can still go ahead and attend, and you've got access to me. So everyone's got access to me. There's not a newsletter subscriber that hasn't been able to reach me by phone, and I answer all my emails usually within a hour or so. So you've got that coming as well. So, and it would be this is going to be an excellent time for you to be able to master and really step up your understanding of candlestick reversal patterns that are out there, A to B equals CD patterns, Gartley's butterflies, and the momentum trades out there that I use each and every day when trading these markets. So that's on the Russell 2000. Let's go take a look at the NASDAQ Composite, the real strong hands out here. Of course, yesterday forming a little bit of a bearish candle, bearish reversal signal, bearish engulfing as it hit the rising price channel out there, got up to a high and sold. Yesterday sold off all day long, got up to 37.56.24, closed at 37.17. So we have seen a reversal signal, but we haven't seen a break of a support area. Support area inside the composite index is really going to be your August 5th high out there, 36.94.19. That's what you're looking. If it fails to hold that level, then old support will now become, and it used to be old resistance, which is now support, and then it'll just simply switch back to a resistance level. That is on the composite. If we take a look at the NDX 100, take a look at its action yesterday. The NDX, didn't form a bearish engulfing candle, but folks, all it did was just simply continue to trade off. But it needs to get back into its lower part of its range in order for it to move lower, and that's going to be the August 13th candle session you want to be paying attention to, 3149.24.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Techno-Mental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 49. S&P is up 6. Composite up 17. And let's go check in on the SOX index. Now, the cool thing about the markets right now, we've taken a look at some of the reversal signals that are out there. We looked at the Russell 2000, for example. We've taken a look at the NASDAQ composite, and the nice thing about that, especially while we're up at highs here, is they help us to set up some lines of resistance. And we've got really the same thing set up here inside the SOX. So, if the market decides to, just because, what I see on the horizon here are a number, of signals that suggest that the way that the market's going to respond to whatever it is that Uncle Ben has to say tomorrow is not positively. Now, these are some divergent patterns that are out there, little nuances that you really want to be aware of. That doesn't mean that that's what's going to happen, but when you see those, you have to say, well, you don't have to. I know I have to say, something to think about. Sometimes it's time to step back, take a look, and wait for the market to commit to you before you commit to it. And that is a beauty. If you take a look at the SOX right now, we're taking a look at a market that's up against resistance. Why do I say resistance? Well, if we come back here and we take a look at the swing points that were being formed on July 16th, the SOX gets up to 493.23, gets up to 493.20 on July 17th. And then you get a nice big bearish engulfing candle. Engulfs 1, 2, 3, 4 trading sessions out there. That was important. That was again, folks, the market, it's a beautiful thing out here because this is the most transparent business that I know of. Because if you just simply go ahead and trade what you see, you trade the charts out there, at the end of the day, when all the trades are in, they just simply cannot hide. The bulls and the bears, they just simply cannot hide out here. And that is the beauty. You know, we are in what's a jobless recovery. How is it ever really going to improve? You've got companies that are flush with cash, that are doing just fine. They're making nice profits, and technology has been a big help out there. And the question is, how are you going to put technology to work for you? How are you going to put technology to work for your children out there? You know, the most important thing that each of us can do is do something beyond ourselves. You know, when you're giving, that's right. When you're giving, you're living out there. And so when we take a look at the responsibility, in my opinion, the responsibility that we have for the loved ones in our lives right now, the most important thing that you could teach them to do is to teach them about money. You could teach them how to make their money work harder for them than they do for it. Because if you want them to be able to have, you know, the statistics out there, it depends on where you take a look at it. In the United States, it's still running about 63 to 65% of Americans believe that their best days are behind them. Now, all of those are not listeners at TFNN, because I know that each of you know that is absolutely not the case out there. But nonetheless, it's still about 63 to 65%. Now, if you go overseas, it's higher than that. If you're over in Europe, it's running to about 70 to 75% of the folks out there believe that their best days are behind them. Can you imagine living your life believing that? You know, I have conversations with folks all the time, and the conversations seem to always stem around their kids that are coming out of college. Now, of course, you know, that's my peer group. I've got, you know, the youngest one is, you know, in essence, she's a senior. Well, she should be a senior, I should say. She's just decided she likes college. She likes that environment. And so she's decided maybe that she'll spend an extra year up there. Actually, she just went ahead and changed her major out there, and I'm glad that she did that. But anyway, that's my peer. And when I do talk with parents or other folks that have got kids that are entering college, in college, out of college, how about folks that have been out of college for 5 years, 7 years now, and their biggest concern is the mere fact of, you know, how are the question always posed, how are my kids going to end up having a better life than what I have unless I give them everything that I've got? And, you know, how are they going to be able to make it on their own out there? And you know what, folks? When I take a look at the real opportunity and I express to them this, I say, number one, you know, that's BS. All that stuff is before Steve out there, because let me tell you what it is that I see taking place. Number one, our kids are going to live way longer than you and I are. When you or they should be able to. When you take a look at the advancements in medical technology out here, they're absolutely going to go ahead and live longer than we are. So they've got more earning years out here, and what you want to be able to do, forget about just whatever the career is. The whole key is making your money. When you take a look at being able to compound money out there, the way that you do that is by truly managing your money, and the technology available to do that is at your fingertips. Look, the winner of the TFNN $10,000 virtual trading competition, he won by placing most of his trades on his cellular phone. A hard-working individual, truck driver out there. But just think about that. Think about the power that we actually have out here. And I want to be able to teach you the power and how to read these markets to make your money work harder for you, something you can pass on to your kids. Go check out the workshop I'm going to be doing next Friday, The Ultimate Money Machine. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see
Access
for
to
yourself
all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind. Absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
This segment is brought to you by Basil Chapman,
TFNN,
editor of the Chapman
Test
Market Line,
Drive.
and all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 50 right now. S&P is up 6. And what a beautiful thing. Our kids should live way longer than what we will live to, just simply because of all the medical advancements out there. You know, I was telling Tom and I were talking yesterday evening, and I was listening to a radio show where there were some scientists. These were not folks that work for some pharmaceutical company or what have you, and they were convinced, they know for certain that they are going to cure cancer. That these were genome specialists, and when you listen to them, look, I'm not a scientist by any stretch of the imagination, and a lot of their speak is above my head. But what I do get is I get the gist of what it is that they're saying. And when you hear conviction, you can hear conviction in someone's voice. You can hear people that are really passionate about what it is that they do. And when I hear that, I listen to those folks. And so when you think about the mere fact that, our kids are going to have the opportunity. So when you take a look at how are they going to have a better life than we do, well, all the tools are right here in front of us. And, it's all these little signs. And I think yesterday was really a great sign when we had our winner in the TFNN virtual trading competition, who basically said, he said, look, I just pulled over in essence, he said, he pulled over the side of the road and he placed most of his trades on his mobile device out there, on his cell phone. And it really can be the same thing in trading because you know what it is that you're looking at. When our kids, you think that they understand video games better than we do? Are you kidding me? Of course they do. And when we take and we break these stock charts down, when you take a look at these stock charts, and some people can look at this chart and say, God, Steve, how does that gibberish, how do those candles even mean anything to me? Well, if you just take some time, what I'm able to do is I'm able to go ahead and compress, what I call decades into days out here, because what I do is I like to teach you just exactly all that you need to be paying attention to. When you really get rid of the clutter in your life, that's when you start to get clarity out here. If we take a look at this stock chart here for the stocks, what I would be teaching your kids are the following things. I would be teaching them where bulls and bears are hanging out. Where they're hanging out, where there's lines of support and resistance, because like any battle out there, when the bulls take over an area of resistance, guess who now controls that line? That's right, the bulls control that line, and price should stay above that area. And so long as it stays above that area within a reasonable range, that means the bulls have charge. And what are they going to do? They're going to forge forward out here. And how do you measure how far someone can move forward? Well, when you take a look at a stock chart here, you would take a look at gaps. Gaps are very important. If we take a look at the Philadelphia Semiconductor Index out here, if you take a look at May 3rd was a very important session out here. Take a look at that little gap up. What did that gap up also do that I would teach you or I would teach your kids out here, because that's really what it's all about. You want to talk about a jobless recovery. This is the recovery. It's the money business. It's the game that most folks don't want you to know how to play, because it really is that simple out here. And that game here with regard to identifying projections of where price can move to, take a look at that gap up. Take a look at as price came down and tested it on June 24th. June 24th is an important day, isn't it? Yes, it is. So take a look at that. It came down and held that area. How about here on the 27th of August as price moved down? The Dow was moving down. I believe it made its low right around the 27th of August as well. Did that area hold? It most certainly did. So now what do we have as you take a look at these two black lines going across my screen? Or does it make it easier if I just simply move it like this? Now what do we have as we take a look at the Semiconductor Index? You got it. We have a consolidation. We've got a nice little consolidation pattern. It goes from 450, we'll call it, up to a high of, we'll call it 490. So we got a 40-point consolidation. If, in fact, come tomorrow, we see a close after Uncle Ben, it's all said and done, we see a close above 493.20 out here. Let's see, what was the high of yesterday? The high of yesterday was 493.88. So let's call it 494. You see a close above 494, the trade becomes easy with regard to the money management and what you should do. You should go long the stocks at that stage. Why? Because you've got a potential 40-point plus breakout there. And your money management, it couldn't get any better than this here. And does that mean that the trade is going to work out? Absolutely not. This is not a business about that these trades work out 100% of the time. There's no business like show business. No. There's no business that I know of where something works 100%. Do you work in a business where you close 100% of the deals? Even if you're not on the sales side, does your sales team close 100% of the deals? No. If you are in a business that's got a restaurant or you're a grocery store or you have something that's perishable, are you telling me that you don't throw away? You do have a business. It's called your refrigerator. You can't tell me that you haven't thrown away fruit, vegetables, or how about this one? The stuff you bring home from a restaurant that, you don't eat, or you certainly don't eat all of it. So we all have costs of doing business. And in the trading market here, if you don't use stops, what better time than early stages for your kids to learn those lessons that you've learned or that I've learned out there, that no matter what, you always have a stop in place. You have a stop in place because this is a game about protecting your capital out here. And this is about being able to understand the patterns that are inside the marketplace. And we're taking a look at the stocks. It couldn't be any easier than this. It really couldn't. And guess what happens? In case of the stocks here, if in fact the way that the market responds is poorly to, it doesn't necessarily have to be Uncle Ben. It can be something else out there, right? If the market starts to respond poorly, we start to see that the stocks can't bust through this area, then what is it going to do? you can play this one to the short side, because where's it going to go? It's going to go all the way back down to that breakout. It's going to go all the way back down to that consolidation range, or it's at least going to make a retracement, right? If we take a look at the retracement, you would go from the swing point from August 27th up to the high of yesterday, the high of today, and you would say, well, you know what, Steve-O, it's going to at least pull back to the 477 mark. That's the 0.382 retracement level. But more likely, it's going to pull back all the way to sweet 618. Back to the 467 range out there in the marketplace. So, I just pulled up the socks just for the heck of it. Didn't have this pre-planned or anything like that, but I'm glad that I did, because it so clearly shows the patterns that are out there. And if these are patterns that you don't see, you should see them. And if these are patterns that if you're one of the folks that or you even know someone that believes, and they've got the resource, a lot of times, there are people that are struggling to be able to find time. I mean, it's really a tough thing to do, or they're really struggling to be able to find money. Those are resources. Most of the time when you ask people, why aren't you taking action, or why aren't you taking massive action, I can tell you what the answers are always going to be. It's always going to be coming back and saying, I don't have this, I don't have that. It's always a resource. How come you're not actually trading in your paper trading? Because I'm trying to get more education or what have you. You want to talk about education? Actually put your money at risk. Get that sphincter muscle so that it tightens up just a bit or what have you. That's where the real power is, and it's really not about resources, because everybody out there has got amazing resources. It's always about being resourceful out here. So I know that no matter what offer I might make, no matter the fact that for the last 2 years I have beat the market, I beat the market. My trades, if we take a look at all my trades going back, I've outperformed the market out here. You don't find a lot of money managers that can, in fact, say that out there. And I know that no matter what it is that I throw out there that I have to offer, people will still use the reasons. I understand it, because I've done it myself. I used to do it. I don't ever catch myself doing that anymore, because it's just always a matter of saying, wait a minute, Steve-O, you just have to get resourceful and step up and take massive action to go ahead and learn something new, so that you can either pass it along to others, use it for yourself to make some money out here. So I think you kind of get the point. In any event, I'll get off that horse, and we'll go take a look at some of these other markets that are moving out here. How could I have said what I said earlier as we were coming down to that other segment out here, which was that, this market should start to move sideways or pull back. And that was pretty easy, just simply intraday, utilizing the set of tools. Now, I love intraday. I like to use 30-minute charts. Right now, I'm trading 19-minute charts on my on my trading platform. It's one of the things I'm going to be teaching folks, a momentum trading platform during the Master Trader Series on September the 27th out here. But when you realize and you step back and you realize that the message that the market is always giving you messages that you can rely upon, where you've got high probabilities, it's a beautiful thing out here. Let's go check out some of these things that are moving in the market as well. We haven't looked at any of the currencies, so let's go over. I know a lot of folks are listening in, and they like to take a look at the currency trades out here. So let's go take a look at the U.S. dollar, Japanese yen. Let's go see what it is doing, really just traveling sideways. Let's go ahead and clean up this chart here. It looks a little bit too dirty and a little bit too messy for me. We can always put patterns back in here. This has got that nice little Gartley buy pattern out here. It actually has worked. We're seeing the U.S. Japanese yen really just trade sideways here over the past couple of trading sessions. If we do go from the swing point high, which would be July 8th, down to the, I grabbed the wrong tool. You got to grab the right tool out here, the Fibonacci tool. If we go from the high of July 8th all the way down to the low of that Gartley buy pattern on August the 8th out there, the 0.786 level, it's hit that. That was at the 100.29 level. Hasn't really backed off much. That would say, to me, as we take a look at this, you can see higher highs and higher lows. You can almost see a rising price channel. We probably can actually go ahead and draw that in here. What's a tool that I use to first do that? I'll take a look at the actual candle closes or open. I'll just simply use a line tool, and I'll start looking for the largest number of co-located opens and closes. Looks like we might have one right there. That helps me then come back and just use my parallel tool. Most charting applications have a tool similar to that, and then you're able to just simply, just like that, in a matter of seconds, just simply go ahead and draw in the pattern that you see out here, and that's the rising price channel inside of the U.S. dollar, Japanese yen. You can see this morning here it hit the bottom of that area, which was also the 21-day exponential moving average, and looks to me like if we U.S. dollar, Japanese yen does not break this, the U.S. dollar, Japanese yen should move back up towards the top of its price channel, and then go ahead and make a run and make a 100% move and swing and trade back into the July 19th area out here. Now, here's the cool thing. All this stuff works on any time frame, any chart. It doesn't matter whether it's currency or what have you. If you are a person that is concerned about your money being in the marketplace, then what you want to do is you want to go ahead and start learning these patterns out here. And what you want to do is you want to start trading, putting your money to work, either trading the futures or trading the currency market. You want to trade something that is trading 24 hours a day, basically, because there is nothing safer then. Because as long as you box your trade, as long as you use stops properly, then it really doesn't matter what happens in the world. If the trade starts to go against you, you can be taken out, and you can sleep a lot more comfortably at night, folks. So if you're one of those individuals who has some concern about that, then because these patterns work on all instruments and all time frames out there. So that's on the U.S. dollar, Japanese yen. It's as quick as that. And taking a look at any chart, let's take a look at the euro, U.S. dollar. Let's look at the queen bee out here. The euro is headed back up. It's going to go ahead and try and take out that resistance level. That's really established by that big old bearish engulfing. On June the 19th, that area has been tested once before and held. That level is 1.3415 out here. That was tested back on August the 16th. That is where the euro U.S. dollar is headed to right now. Neither overbought nor oversold, so it can easily move up. If we take a look at retracements, how can I say that it's likely going to go up and take a look at that level? Well, if we take a look at retracements, you can see it's already hit the 0.786 retracement. It did that on Sunday evening when it gapped up a little bit. So, you'll see gaps in currencies on weekends oftentimes or sometimes. Usually those gaps get filled. In this case here, it has not been filled thus far. That says to me that it wants to at least go make that 100% move and try and break out. That would be the euro U.S. dollar. Let's go take a look at the Great British Pound. Let's go see if there's any kind of chart pattern in here. The Great British Pound, of course, we drew this chart pattern in a long time ago, and that is the 1.272 butterfly that it wants to go ahead and fulfill. Let me see. Let me change this here. It'll give us the actual price area. So that would be about the $1.60 level. Right now it's trading out at 1.5899, and that is where the Great British Pound wants to head to. We can see here that the Great British Pound U.S. dollar is also getting into a overbought condition. So as it hits that level, and when it gives us the reversal candle, that is where you want to go ahead and put on a short trade in the Great British Pound U.S. dollar. I mean, it is just out there for the taking. This is a really nice looking pattern out here. If we take a look at it, if it completes that pattern in that 160 level, that will go ahead and most likely give us a retracement back to about the $1.52-ish range out there, pull back all the way into that point, 618 area, but it'll first have to break a hammer candle in order to do that. Where's that hammer candle? It's sitting right here at the August 28th level. So $1.54 is going to be a really pretty good area of support. So let's assume that this pattern here works. It completes that 1.272 butterfly, and as it does that, it starts to pull back. Boy, you better put on your seatbelts as it moves down into that hammer candle, which is also right at the 0.382 level. So anywhere between $1.55 to $1.54 out there is where the Great British Pound will find its first level of support out here, and it is a nice looking pattern. You can see it's a 2.712 expansion of a set of swing points, but if we just simply go ahead and put the measurement tool out here, we'll see that the range, the 2.618 level, about $1.59, so 1.597 to 160 is likely the target for the Great British Pound U.S. dollar before it decides to go ahead and just simply reverse. Just go ahead and form a normal pattern out there. There's number 2 trade that we'll go ahead and we'll pay attention to this one here. We'll just keep monitoring this just like we will the Shanghai, which I can't recall if we did that this hour or the last hour, but that too is going to go ahead and pull back and set up a nice trade opportunity for us. 877-927-6648. Hey, how about that? The market is selling off just a bit. That was a pretty good signal that the ES Mini gave us on that 30-minute chart, wasn't there? We'll be right back, folks.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 38 points right now. S&P is up 5. Russell 2000 up 4. Quick peek in on the New York Stock Exchange. Let's see what that is doing here this morning. The NYSE, that is up 21 points, up 0.2% out there. So that is the laggard. Something to think about. Now, what is it that we are going to be paying attention to here over the course of the next couple of days? Number one, we've got the VIX index on my screen. It's trading out at 1437. The VIX index gets above the 50-day exponential moving average right now, 1471. So you're only talking about, 34 cents higher than where it is right now. If you see a move above that, especially if you see a move above that today, there is your signal of trouble ahead, big trouble ahead, detour, as we would call it in the stock market. Whether that's a correction, just a pullback, whatever it is, the detour sign would be out. So we're going to be paying attention to that. Can the bears take control of the market today? Well, what they would actually need, let me switch over to my spreadsheet where I keep all that data. What the bears would need, they would need 1,986 net declining issues. So that's something else that you would want to be paying attention to. So far today, you've got net advancing issues, so that's bullish, 736. So all of the normal signs that you would point to right now, they're still bullish. But the problem is the underlying in the marketplace, there are enough signals to make you just say, truly something to think about. And this is a beautiful market. As we were taking a look at the stocks out there, there are some trades that are just setting up where if the market gets above resistance areas, it becomes an easy trade just simply to go ahead and go long. So you need 1,986 net declining issues today. I don't think that's really the one for us to be paying attention to. The VIX, though, that is a whole different story. The other areas that we're going to be paying attention to, in fact, speaking about the New York Stock Exchange, as I go ahead and pull that up, we can see that it is up over a resistance level. That resistance being that key reversal bearish engulfing session from May 22nd. So that in itself is positive. That high was 96.9546. It tested it yesterday. What concerns me a little bit here about, not a little bit, quite a bit about the New York Stock Exchange is that we've got a number of indexes / ETF structures, sectors within inside the S&P that are all set up for potential island reversals. So if anything goes wrong overnight here, that is so there's some potential bearish signs out here in the marketplace. The New York Stock Exchange is the one that we want to really be paying attention to as well. If we go take a look at some of the sectors within inside the S&P 500, well, you can just tick them all off where that potential is there for an island reversal. Here's the XLF. The XLF gapped up yesterday, just having a little bit of an inside day. Wouldn't take much for it to get back inside the lower part of its range, May 22nd, and if it does it with a gap down, that is a island reversal pattern sitting out there. The industrials, the XLI, at all-time highs. I believe that's at all-time highs. That is setting up for a potential island reversal out there. The XLV, the health sector, that is a number 2 weighting structure. That's also near all-time highs. Today's a bearish engulfing. I wouldn't pay much attention to today's candle, but that also potentially setting up a island reversal. You got them all out here. The XLP, the consumer staples area, that too with potentially. And this consumer staples area has just simply come back into the area where it broke down back on August the 14th. So this is this is a time to be very careful out here. The building sector, the XLB, same type of pattern setup. So the cool thing here is that the market is giving us plenty of signals for us to pay attention to determine what its next move wants to be. Stay tuned, folks. Basil Chapman is up next. We're going to go ride the wave after Basil. It is the Options Hour. Daryl Martin, David White, Andy Hecht, and none other than the leader, the Tom O'Brien Show from 4 to 6. Have a great Tuesday. Look forward to seeing you tomorrow. Take care, folks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.